Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash. Podcast we've been doing now for about 2.5 years that takes a somewhat of a comprehensive look at some of the changing figures, factors, and dynamics in our domestic economy, the global economy and marketplace as well. I have with me my co-host, Chris Agelastos, here today. Chris, good morning to you.
Yeah, good morning.
On this fine sunny day here in Arizona, which
Lots of sun.
I actually, as I was kind of preparing for our podcast, I was flipping through some news things, et cetera, and it's been hot here in Arizona, ladies and gentlemen.
Yeah.
I mean, we last week were as high as I think 105, and you're talking, not even barely mid-March, and they are saying though, like they're seeing unusual blazes and forest fires kicking up around the country, and they're anticipating it's going to be kind of a hot summer for everyone. So we got that going for us. And if last week was any indication here, we are, I'll go as far as say we're kind of in trouble. But
I'll still take the heat over the cold, though.
I don't know. And
No?
the other thing, I'm not, because I walk my dog at least a couple times a day, and the bugs. There's just so many bugs out. It's like, good Lord. And, it seems to me, and I know we're getting way off topic here, but like when I'm walking that dog, there's just that one fly that keeps perfect pace with me and just will not go away for 30 minutes. So anyway, so we're talking about heat, we're talking about fire. Let's get into our first article here. Gold's biggest fire sale in 43 years, perception versus opportunity. And gold, as a direct result of what's happening in Iran right now, had a huge pullback, from the mid 5,000 range down into the mid fours, and maybe even close to 43 now, 44. And the bottom line is that it's, it kind of got a few people's attention, like, oh my gosh, what's going on here? And this was in fact, I encourage everyone listening, if you have any interest in gold and really interest in like what's going on in markets and the economy as a whole, this is not a long read, and very, very insightful, a lot of very good information in it. And Chris, as I was going through it and looking at it, it's funny because Tyler Durden here, this is from Zero Hedge, talks about how gold is falling. Okay, gold prices are falling. Well, that's obvious, but not gold accumulation. Gold accumulation in the physical marketplace, people are still buying it up, and largely banks, institutions, et cetera, because they know what's going on out there. And this is what's interesting. And this is something I, being in the business and the market like you and I are, kind of half anticipated or figured. But what he talks about is how speculators are the ones they're the ones who are driving this drop, because the people who, gold started off this year at 3,000 an ounce, I believe it was. Is that correct, or was it 4? It was 3.
It was in the 3s in December of 25. It was in the 3s and working its way towards the low 4s. So we're really not, far off that.
So even with the drop, it's still performance-wise for the year has done well.
Yeah.
But they talk about this as well, that we saw this back in the 80s when we had the oil crisis, and then OPEC was selling off. Well, again, for those of you tuning in, if you may or may not be familiar with the fact that in a lot of industries, depending if they're managing debt or commodity, et cetera, they'll often hedge their positions with different other commodities. And OPEC nations utilize gold as kind of a hedge. Well, they were selling their gold to cover their positions or to generate cash, I should say, actually, back in the 80s. And what they're talking about here, which I think is a really interesting point, OPEC nations are selling a lot of gold right now as well. It's not just speculators, but OPEC nations. But the reason they're doing it now, even as oil prices are spiking, they run these major oil operations. They need capital in order to function. And even though they have all this oil, because everything is basically kind of shut down, they can't sell their oil. And so therefore there's a need for them to generate cash. So I'll let you talk on that a little bit, Chris, because there's a lot of meat in this article and very interesting information.
Yeah, and this too, I like to point out to our clients who are all dealing with physical metal. Everything we work with here is, physical bars or coins, actual physical gold. And a lot of this sell-off that they're talking about, in fact, all of the sell-off they're talking about, is paper gold. This is
Right.
ETF funds and people, like you said, hedging their positions and playing in the futures market. So when somebody who doesn't know otherwise, you see the gold price drop, the spot price drop, you might think in your head, oh my gosh, there's less demand, so because of supply and demand, and the price is falling. And what this really is a buying opportunity for those that are looking to buy physical gold to protect themselves and their dollars and their portfolio long term. And that's really what these little dips are. And I say little because I think it was like maybe 9 or 10%, which, if you're investing in something like a Tesla, that would be considered a very minor move. It's just a little bit bigger compared to what gold typically does. It tends to be a lot more stable. But so that's why I encourage people that are interested in buying physical metal to protect themselves long term. This is a great buying opportunity. These swings, it's not like this happened because people are dragging their physical gold in and liquidating. This is all just paper markets affecting the spot price. And those of us in the industry, right, we know that the physical market and the paper market are often disconnected. And what happens in one doesn't necessarily show what's happening in the other. So
You're right. They're related, but they're almost distant relatives, because to Durden's point here in this article,
mm-hmm.
What the paper market, the paper community, we'll call it, is doing, and what the people in the physical community. I mean, take central banks and institutions who are buying gold.
Yep.
Even if this drop did not happen, they would still be buying gold.
Yeah.
But they'd be paying $5,500 an ounce for it. So now when they see a drop like this, roughly a 10% drop, they're still doing the same thing they were, but they're doing it on sale. And
that's it.
But the other, to your point, in the article as well, they talk about how just recently $70 billion has gone into gold ETFs. Okay. Mm-hmm. Paper gold, like you're talking about, but moreover, not just ETFs, but they are leveraged ETFs that he says, and the kind of ETFs that are 2 to 3 fold leveraged, and they daily rebalance. And so what that means, ladies and gentlemen, is as they're double to triple leveraged, as the market drops, every day they have to sell off more stuff in order to cover their short position. And these were speculators who got in there wanting to, basically, I'm sure, anticipating, gold going to, ideally in their world, of, $100,000 an ounce, and they'll leverage it all the way up till it gets to that point.
Sure. Yep.
So
yeah,
all right.
There's a lot of that's why I say it's a lot. Gold itself, physical gold, physical silver, is pretty simple. When you start getting into the paper markets and leveraged funds, that's where it tends to get complicated. And the average people in this country that are looking to protect their savings, they don't want anything to do with that stuff. And so for most of our clients, this is just a bit of a blip of a news story and maybe a buying opportunity if they've been looking at adding to their positions. But for a lot of day traders, this sort of thing can be a little stressful and cause problems in their position.
Sure. Well, and then so again, I encourage people to read that article because of all the information in it. Let's look at our next one here. And the reason I wanted to incorporate this one into our show today, here we have the title, JP Morgan CEO Jamie Dimon said this asset, talking about gold, could soar to $10,000 an ounce despite dismissing it before, and meaning that he was kind of dismissing it before. And then it says how 2026 is shaping up. And the key with this is Jamie Dimon is not typically a big market predictor. Okay, he talks about what's going on out there, but not giving predictions and things of that nature, probably because he doesn't have to. Okay.
Yeah.
And as we just talked about, all the traders that were dumping, their gold positions for leverage reasons, et cetera. Diamond talks about the real factors in addition to, this, all of this has happened as a direct result of, again, the war in Iran. When you look at, peel that aside, and then you start looking at all the other factors, which is basically what Diamond does in this article here. That's what matters, is because these are all things that were a very integral part of what gold had done in terms of its performance and appreciation. And that stuff hasn't changed. In fact, it's looking like it's probably going to only heat up more.
Oh yeah, he's like you said, expecting it to rise as high as 10,000, and he's come out in the last couple of months predicting somewhere between 6,000 and 8,000 this year, and 10,000 in the next year or so. And that even highlights more how, whether gold is 4,400 or 4,500 an ounce or 5,000 an ounce, doesn't matter if it's going to 6, 8, 10,000 and beyond in the next several years. And if you're buying it long term and not as a trader who is just trying to make a quick buck in and out of the market, maybe multiple times in one day or over the course of a week, it's a whole different ball game. And unfortunately, I think sometimes we see those headlines on the news channels or on business news, even though it really doesn't apply to the average person. But he very much has pointed out, look, all of the inflation, geopolitical instability in the world, elevated asset prices across all the markets, these are all things that are pointing to higher gold prices, despite the fact that he doesn't himself personally always love gold. And he talks more about having to store it and insure it and those types of things. But he builds most of his. Those are and at his scale, let's be honest, what he's doing is making all of his wealth through his own corporation. So he's in a different position again than the average person in the country. But the bottom line he says here is that he's endorsing it as a good defensive asset for a volatile environment that I think we're going to see at least through 2026 and likely through 2027 as well.
Right. Absolutely. Well, definitely, it's a good buying opportunity and something to take advantage. And for those of you tuned in, two things. If you haven't contacted us to receive your free copy of our Secret War on Cash report, I highly urge you to do so. Or if you'd like if you'd like free information as well on how to get involved in gold and silver, even if you're not sure you want to get involved, you just want to learn a little more about the market, I encourage you deeply to contact us here at our office. You can do that at 1-800-289-2646. You can call or text that number. You'll see that number in our show description. Or you can also visit us online at www.swissamerica.com. Thanks for tuning in. Chris, thank you for all the information. Look forward to talking to you more in the future. For all of you tuned in, if you're not subscribed, please do so, and look forward to talking to you more again. Have a great rest of your week.
All right. Thanks. Take care.